Hello and welcome to today's daily market video brought to you by the Academy of Financial Trading. Now, before we get into the current happenings, I'd like you to just take a quick note of our risk warning. Obviously, trading the financial markets using leverage is inherently risky, so please do take time to have a look and read through our risk warning. So, jumping straight into some of the events that have been occurring, I'd like to draw your attention to firstly the BOE bank rates and really ask the question, is there potential gains in store for the pound on the back of the potential interest rates hikes? So what I'm going to do now is just take you over to this obviously Thursday, September the 10th, and let's have a look at the 12 p.m. noon news release. So this was our MPC official bank rate votes. So let me just click on this and let me show you that up until last month you can quite clearly see that all 9 voted in favour of actually keeping the interest rates where they are. But last month it was estimated that 2 out of the 9 might vote in favour of a price increase. However, only 1 of them actually voted in favour. So obviously there's rumblings, but you would see by the votes that things seem to be moving in the right direction. And again, at 12 noon today, guys, you can see that the same person actually voted in favour of that interest rate hike. So now let me just take you over to the charts, and what I'd like to do is to just basically show you this euro pound chart. So obviously price had been moving quite heavily to the downside. Let me take this opportunity to do a little bit of technical analysis, just using very, very basic support and resistance. Let's sort of work with this kind of level as well, and a top level of resistance in the market. So that's essentially what we're facing with. So since March, guys, price, as you can see, had largely been moving sideways. So what I'd like to draw your attention to is this sort of structural, this structure here where price had moved up to the point of resistance, back down to support, off the resistance again. So we've got a mini structure. So what we're now looking for is potentially a break beneath this sort of 72.40 level. If that happens, it would be quite obviously, bear in mind the ECB quantitative easing program. It's quite likely for the euro to weaken furthermore at some point. So do bear this in mind, and this little mini structural break to the downside, you know, could be the start of perhaps another leg. Obviously, we've got a few hundred pips down to these points of resistance, so you'll have to bear that in mind as well. So that's just a little bit about the BOE. So let me now just move on to a potential Fed increase in interest rates in September. So what might this mean for global stock markets? So again, guys, let me just take you over to the actual news release, which is next week, and let me just scroll down to Thursday, if I'm not mistaken, with the FOMC. Now this down here, guys, you can see that essentially the interest rates have been less than 0.25%, so incredibly, remarkably, historically low levels. Now there is a lot of talk and hype out there in the markets about a potential move to the upside with interest rates. So it's expected that in September the announcement might be a 0.5. However, as usual, guys, we always need to wait and see. But let me draw your attention to the global stock markets. So let me show you this chart here. This is our S&P 500. So we can see an incredible move to the upside. If I zoom in just a fraction and do a little bit of very, very basic support and resistance, lines of support and resistance, we can quite clearly see a very nice break around this area here where price moved to the downside. Then we've somewhat created another what I would regard as a mini structure. So it is quite a large sort of movement in price, this kind of range, but if we can see that we've created a point of resistance in the market, it kind of meets some of these lows to the left hand side. However, if we get the structural break, and depending on the interest rates decision, we may see a nice clear break of this 1900 level, and we may see a further leg down. Now again, we could also quite clearly see that above the 2000 level, we might see a really nice leg to the upside. So you've got to be very, very aware in terms of what's happening and what can happen depending on whether there is a Fed rate decision or not. So what you can quite clearly see is the same thing has happened across the major global indices. So this is the Dow and this is the FTSE. So you can, if I take this out just a fraction, so you can see you've got, broadly speaking, a very, very similar price action where they've all created these kind of mini structures. So, and again, this is the Nikkei, the Japanese stock market, and we're currently in two positions to the downside on this. So again, we're a net gain on these two positions, which is great for us to be in. We took advantage of these moves, and you can see again this mini structure. So if we see a break of this mini structure, we may see a further leg to the downside. Equally, depending on the Fed rate decisions, we could see a break of these clear sort of lines of resistance and a break to the continued to the upside. So just be aware of these types of things, guys. So finally, let's just have a quick look at gold. Is gold technically breaking to the downside? What impact might a Fed rate decision have on the gold? So I'm going to bring up the gold chart and just show you what's been happening. We have seen a fairly consistent move to the downside in the gold, over the last, couple of years now. So we've consistently been moving down. So let me just zoom in a fraction. So again, guys, I'm just going to work with incredibly basic technical analysis, nothing too complicated whatsoever, and we would have another point of resistance down here. So I just want to make the point that yesterday we saw a mini break with some considerable momentum to the downside. Now, if we see the pound strengthening, it would be a logical conclusion for this being a gold and a commodity. For this to move, it's a correlated I suppose, position. So we'd be looking to trade gold to the downside. Obviously, at least to these levels of support down here around the 1060 level. So bear these in mind, guys. And that about concludes today's daily market report. So as always, guys, thank you very much. If you do have any questions for us, do feel free to get in touch with the Academy of Financial Trading. We'd be happy to take your questions. So thanks very much, and bye for now.